And your first guest today says that as long as the job market in America does not collapse, stocks should keep moving higher. Michael Cuggino is president of portfolio manager of Permanent Portfolio Funds, based right here in San Francisco. So great to have you on set, or I guess it's great to be on your set, Michael. Good to have you.
Yeah, it's been a while since being in the bureau, so it's exciting to be back.
This is great. It's important. And you have a really unique and interesting strategy. You have a lot of gold, you have a lot of cash, and then you have a lot of higher growth stocks. I'll get to the stocks in just a second. What did you see in gold that others must have missed? Because you've just printed money on gold, I imagine.
Well, there's no question recently that's occurred, but when you look at the gold is very long cyclical. Okay, so there was a period where there was a reval. It was not doing anything for years.
Nothing.
And so there wasn't a lot of interest in it. So some of that is just a revaluation trade. Then when you look at all the macro factors, the declining Fed rate policy likely, geopolitical issues, central bank buying to support maybe currencies that may compete with the dollar for market share on transactions. So you have a lot of factors. Real interest rates are likely going break even negative. So retail buying strong. You can go on and on.
There's literally a book, I think it's Nathaniel Popper, if I got the author incorrect, forgive me, and it's called Digital Gold, and I read it a number of years ago. It's about Bitcoin. I thought Bitcoin and crypto were going to replace gold, but instead they're both going up together. Does that surprise you?
Short-term correlations can do anything, but I think people need to understand that, they are not the same asset. They're different. They don't respond. I mean, crypto to date, in its shorter-term trading history here, going back to when it was created 10, 15 years ago, has more correlated to the triple Qs or tech and easy money than it has the performance of gold. So it's an asset class, but it's not necessarily a replacer of gold or does the same things. And investors need to keep that in mind.
Okay, so we just showed kind of your mix. You've got cash, you've got gold, you've got what you call commodity stocks. You've also got, though, high growth, what you'd call high growth stocks. Your biggest single holding, at least as of the last reporting period, Palantir. Another big winner. Are you still believing Palantir is going to keep winning?
Yes. They have a huge addressable market. They're growing revenues and earnings very quickly. It's definitely a high-priced stock, but as with most growth companies, that's what happens. You look for opportunities to buy it when it gets cheap or sells off.
One of your other big holdings is Meta. Meta had it's had an amazing run. Okay, so I don't want to. It's got a terrible week. It had a terrible day. Its worst day in I think 3 years. Stock's down 11% this week, but let's be clear, still up for the year. Still's made a lot of money. Did you use any weakness in Meta to buy more?
We did buy a little bit more, and I think the market reaction's overdone, and that's just faith in the company. You look at that group of stocks this week, and most of them went up after the earnings reports, and the CapEx numbers were just as big, if not bigger, than Facebook's. So the conventional wisdom was Facebook's going to spend a lot of money. They're issuing bonds. Look out. But the other companies are spending just as much, and those companies are also growing revenues and earnings just like Facebook. So Facebook has a great history over time of reinvesting in the business in well-timed cycles that end up growing the business for the next few years.
So adding more, you added a little more Meta this week.
We did, and we think that longer term, it's trading basically a market multiple right now, which is unusual. And so we think long term, we believe they're going to get it right, and it's going to translate to future growth going forward.
This next pick is really interesting because, Palantir, NVIDIA, Meta, stuff we talk about pretty much every day on CNBC.
Yeah.
We don't talk about Texas Pacific Land, TPL.
Yep. Smaller name.
One of your biggest holdings.
Yeah, it's a royalty. It's a landowner royalty company based primarily. It's Texas, and they make money basically on oil and gas and increasingly some water rights under the land that are paid royalties to the company. It's a play on domestic oil production.
Quiet
oil
company.
Usage.
They don't crow a lot. They're not out there. By the way, TPL, you're welcome to come on me anytime on CNBC. But kind of I would imagine, is this a cash flow story?
They've been around forever, and CapEx is obviously very light, right? So it's a high margin business. They print money based on royalties, and as long as energy production and potentially water rights issues are positive down there, the company should be expected to do well.
Okay.